Alright, this is Ubaid on behalf of V Electronics, and in this video we're going to talk about the Gordon Growth Model. Alright, now when it comes to your Gordon Growth Model has to do with the intrinsic value of stocks or assets. Okay, and basically what you're doing is you're trying to figure out the impact of, let's say, technology, the impact of inventions, innovations on the price of the assets, okay, such as stocks. Okay, so if you were to write this formula on a piece of paper, okay, this becomes P equals, okay, E times 1 plus, this will be G, all raised to, okay, this will be K minus G. All right, so again, this is E times, okay, 1 plus G, okay, all raised to K minus G. All right, so say, for example, your earnings per share, or E, has to do with $20. Let's say it's $20 per share, times this by, let's say your growth rate of your dividends is 5%. Okay, and let's say K is what the investors want in terms of rate of return, and let's say this is 8%. All right, so if you were to use a calculator, okay, this will be 20 times 1.05 divided by 0.08 minus 0.05. This comes around $700. Okay, so this will be $700. However, if you were to bump the growth rate up, let's say your expected dividends are going up, okay, let's say because of technology, because of inventions, innovations, so on and so forth, okay, what's going to end up happening is, okay, the price of the asset will climb as well. All right, so if you were to write this on a piece of paper, okay, this will be $20, okay, times, let's say, 1.08. Okay, you all divide by 0.08 minus 0.06. All right, so let's say this is $20, 20 times 1.08. Okay, divide by, okay, 0.08 minus 0.06. Okay, this is 1,080. All right, so this is 1,080. So notice as the growth rate for dividends went up from 5% to 6%, the price of the assets, such as stocks, went up from 700 to 1,080, which means that as per this formula, the price is directly proportional to your growth rate. Okay, as growth rate goes up, the price goes up. As the growth rate goes down, the price goes down. And you can reflect this in real life, where as the innovations, inventions, or technology in general, okay, increase the price of the asset, okay, or increase the growth rate for dividends, okay, what's going to end up happening is the price of the asset, the price of the stocks, for example, will go up as well. Okay, because obviously when the investors expect future prices to go up, whether it's real estate or stocks, the present value will climb as well. Okay, so that will be it for this video. On behalf of V Electronics, this is Ubaid. Have yourself a great day.